Good morning. Okay, there I'm live. I'm turning on my do not disturb. Okay. Okay. Let me get this up on my iPad. Do, 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 do. That's probably why I'm never. There we go. Okay. Let me get this up. Sweet. I can hear my voice. Wada! Wada! Give me 1 second. Let me just go over here. I've got to just do something real quick on the computer that I don't want to broadcast on. Okay. Gonna turn that off and we'll go back here. We're back to Big Head. I'm gonna do some scans. Morning, Scott. Morning, Scott. Man, I don't know how you guys in California get up for it. But let's see. Walmart and Pepsi. And core investments. You guys are going to see me bounce back and forth. Pepsi and Walmart. Covered calls. Nothing there. Energy names. UCO. Sweet. Levered ETFs. Nothing. Boy, man, this laptop just screams compared to my my iMac at home. Let's go to Dow. Walmart. Let's go to NASDAQ. Monster and Pepsi. Scott, there are plenty of people who would disagree with you. My friends would probably say, who the hell wants to listen to him drone on at the beginning of the morning? Okay, welcome back. Okay. Nobody loves listening to me. We're waiting for the CPI data, by the way. I'm going to hang out with you lovelies for 20 minutes because I just got through all the scans. Boeing. Let me see. Shop. Apple up above 180 again. Amazon's hitting that one just over 130. Boeing still under 200. Okay, and I talk about this all the time. So let's go to the 4-hour. We'll go to the 4-hour. The button hook that I talk about all the time. Look, it's happened. It's happened, the button hook on Boeing. Joe and I had a discussion on Facebook. It was actually one comment back and forth, so it wasn't quite a discussion, but it was he works with Boeing, and so he sees the inside of stuff. I've worked at plenty of companies, and you see the inside, and then you're like, well, how the hell did the stock go up? This company sucks. So Bank of America, the button hook. Cleveland Cliffs, the button hook, and it's crossing that 200-day. Costco just continues to climb. Disney, we saw the button hook here at 81, and you're at 84. Devon, we saw the button hook. Boom. That bottom portion of the button hook, and you saw it here, even in FBCG, which is that ETF that I recommended. See it here, 132 with Google. You're going to see it here with Goldman. Not quite as dramatic. It's a slight slide up. That's awesome. I love, thank you, Scott, so much. It's funny because I think, let me get the small cam back. I think I get at least, 4 or 5 emails a week from social media marketers who want to take clips of my show and promote it and grow my audience and stuff like that. I don't know. I mean, I have ambivalence about that because I like the small audience. Look at Eli Lilly hitting 600. AMZN. I mean, if this weight loss drug is for real, I mean, look at that, 544. You've gotten a 10%. Look, okay, let's just move this. So there's 544, and we're at 604, 11% in 5 days. And that's on a stock that if you go weekly, that has already just taken off here from 336 back in March, you've doubled. If the weight loss, drug is for real, I mean, that's just crazy to me. And I've got a note about AMZN, and it's in Motley Fool. Oh, come on. Global Foundry, AMZN. Later this month, the Wall Street that the company could capture some of the bounty from the weight loss drug that has brought a windfall to Novo Nordisk through breakthrough drugs like Ozempic and Wegovy. AMZN has a number of weight loss drugs in the pipeline, and the stock trades at a modest forward to price earnings of 13. Let's just go Lilly. Lilly's forward PE, 48. 48. AMZN, getting into the weight loss, 14. Let's go Novo Nordisk, which is NVO, forward of 32. Yeah. But still, if AMZN gets one of these weight loss drugs, and you've got a forward PE of 14 right now, average target price 260, you're trading at 280. I mean, the weight loss drugs, it's factored in, but not in their forward earnings. Insider Monkey. This was yesterday, 5% on an upgrade. My notes are from yesterday, or from Tuesday. I'm a little behind, but that's just crazy to me. This is an interesting video. I was watching this before.
Concept of supply and demand zone.
Oh, it's loud in my headphones. I'm not going to play it. But maybe I'll include this. I gotta watch the whole thing first. I'll move that over there, and then I want link tree. So that I can bring that up. I'll close that. I've gotten that in my history. Or SPY. I mean, even if you went here at 421, have we seen the bottom of SPY? Here's the daily. You bounced right off the 200-day. Here's the weekly. You're still moving downward, but your 50-day and 200 are still moving upward on the weekly. If we look at the monthly, look at that. That's the Ukrainian war. Went down 22%. We haven't gone down 22%. But if from the high, let's say this was the high. If we go down 22% from there, we would get to about there. And I think 4 months. Yeah, let me look at wire. Yeah, because I'm here until freaking at least 8:30. What is Encore wire? Whew. I don't even know what they do, but the chart looks neat. That's a nice looking chart. I mean, what? 2021 at the highs, November 2021. And then last year it just traded kind of sideways. I mean, it traded sideways for what? The beginning of 2021 all the way up to March of this year, it took off. January of this year, it took off, and it's continuing to take off. Let's see what wire is. Electrical equipment, $3.22 billion market cap. Insiders only own 5%. Shares floated 15 million. Shares outstanding 18 million. Average target price 160. You're trading at 190, but it's not heavily covered, so ignore that one. Look at more October. 235 is the target price. You're at 191. It's up 39% this year. PE of 6, forward PE of 10. So they're expecting some pretty heavy growth, it looks like. Dividend, nothing to speak of. Let's see the insider stuff. Insider sales in April, nothing big. I mean, that controller February 21st, looks like he sold, what, 4,000 shares, but there's millions of shares out there. He's not selling anything big. Let's see. Let's look at the PE, average the P of, yeah. So as far as electrical equipment and parts, it's got a fairly low PE. At 6, it's one of the lowest. So it's not crazy. The volume's low. I mean, 156,000 shares. It's not, I don't think it's a bad one. You know what? let's go over here. Let's go to our premium. As long as we have this, we might as well use it. So Seeking Alpha analysts buy at 3.5. Wall Street strong buy at 4.6. Quant says hold at 3. This is from Good Value with Renewable Upside. The shorts are offside. It was a short squeeze. Let's read this article. I think it's a short squeeze. Yeah, climbed from 2.5 million to 3.9. Retired a material amount of shares and re-upped its buyback, authorized 2 million shares to buy back. Has built a strong business with a high market. I am encouraged in conviction investing. There you go. This article is from September 15th, so it's a month old. But it does look like this one. Here's the article, Scott, if you want to read it. So it looks like it was a short squeeze that initially sent it up. Yeah, this is a good quote. Arguably, the shorts are simply looking at mean reversion and Wire's hockey stick growth of earnings per share and adjusted EBITDA and thinking it's purely cyclical. That probably is true. This is from their shareholder stuff, conference call. Despite the weaker price on China, fears or playing game with copper inventories in their warehouse, the physical copper market is extremely tight. Per Wire management, there are at least 8 government programs designed to invest in the U.S. infrastructure. We're talking about $1 trillion. Good article. Hopefully you can read it. Hopefully, if it's a premium one, you can use the link below to sign up. But they don't look like there's a ton of news. That's from July, so ignore that one. I would say the 2 buys that you're seeing, underpriced company caught in the crossfire of shorts betting on copper prices dropping despite long-term growth. The company has strong earnings, a strong balance sheet with no debt. I mean, if we look at just the short interest, that's a pretty big percentage. 26% short. But that's probably the reason for the July to now rise. And it does look like here, February, if we just take a look at the weekly here, here's what I would say. This high price of 206, let's look at this, because we're going to look at the share price today. I don't even have to do the percentage. There's not much upside to get to the all-time high. And with that growth, I'd be a little bit scared of it, but if those 2 guys are right, and its PE is not crazy. The forward PE at 10, that looks a little bit skeptical when you go over here and you sort it by PE. That would put it up in these guys' territory, which looks like much smaller companies. Yeah, but I think I think that short interest is what pushed it up. I just don't know what the upside would be. It's kind of like when you get to all-time highs in stocks. We can look at Eli Lilly. And you go to let's just go to a monthly on this one. I mean, you're at all-time highs. When you pulled back here, this all-time high of 601, you're at 608 right now. 608 is this week's high. So you tread lightly in those kind of territories, just because typically it's hard to an all-time high usually is used as fairly good resistance, and it'll bounce off there. Roblox 31. Uber I like. I need to write down Uber. Mara I like. SOFI I like. SOFI, remember I said I think it's going to 10. It's 758. I think it's going up. So CPI 3.7 versus 3.6, so it's back up. But the futures haven't been hurt. Scott, it was hey, give me a stock and I'll just take a look at it. You've been listening to me long enough. You should know where you can get stuff and all the info. Let me put in the CPI. Okay. Hopefully you don't hear me typing too much. I do type fast. Okay, I got a lot to go over, so I'm gonna start here. Jobless claims. Morning, Joe. I mentioned you about the Boeing stuff. Here, Joe, here's what I'm saying with Boeing, by the way. And yes, it could go lower. But look at that classic button hook right there with confirmation. You're touching the 50-day. 50-day hasn't moved forward. You got that death cross right here. But historically, even on a weekly, you pulled back down below the 200-day. You've got the golden cross going on the weekly. So that's why I was saying, I know you work in there. Yeah, bonds are driving the market. But okay, Scott, let me get in here. But Joe, that's why I was saying, hey, I like Boeing. I'll go over stocks I like at the end. And I'm going to start with SPY. Let me see. QQQ is about the same. Why is that going over there? Oh, okay. Lily was crazy winner yesterday. SMI gap cover. Oh, I do want to bring up Savvy Trader. So I'm going to get to Savvy Trader and the core portfolio. There we go. I should take out some cash from this core portfolio. You know what? I am going to take out cash. We'll hide cash. That's what we'll do. You know what? I should. Let me see. How much do I have? 321,000. I'm going to take out. I'm not going to notify members. 321,000. Do withdraw. Pending. Okay. We're going to take that out. We're going to compare against Dow Jones. We're beating it. Against QQQ. Kind of in line. Nothing crazy. NASDAQ 1.31. Daily stock pick 1.23. SPY. We're beating it. So. Okay, I'm going to get rid of that. Well, we'll keep this. Home. Okay. QQQ button hook going higher. We'll go to SPY. Okay, and we've got that. Core portfolio moves. Great article on Meta. Boeing under 200. AMZN. D by PXT waiting on the earnings. I like that one. PDD owns TMU. Oh, we're going to get this. I want to show this. Okay. Morning, Zephin. Long time no see. Zephin's an OG. I got invited out to San Diego. And I was thinking, ooh, Zephin lives in California, but I think you live in Orange County. Okay. I hope if you talk to James, I remember James. I remember you telling me that he had a kid, so he couldn't trade much anymore. Okay. I am on my AirPods. I'm going to hit recording. Good morning. It's Thursday, October 12th. It's CPI day today. It is inflation. Inflation is the number one thing that the Fed looks at. Right now, number two is the job market. We had both reads today. CPI, core price inflation, 3.7% versus a 3.6% expected. That's year over year. Kind of in line. Yesterday, while I was traveling, you had the wholesale price index. It was up a little bit as far as inflation shows that inflation is still around. So the Fed may hike rates. Definitely won't lower rates, but they may hike rates in November. I think with both of these kind of in line, the jobless claims came in just in line, so nothing crazy. I think it was 209,000 versus 210,000 expected. I may be kind of backwards on those. But it looks like no hike November, which is what we're calling it. No hike November is still in play. And if you want to see how the market did yesterday, here's kind of what it is. Exxon down because they announced the PXD transition purchase. We'll talk about that one because I do have an interesting way to play the PXD if you're currently holding Pioneer Natural Resources, and kind of my thought process as to what to do. But energy as a whole, still in play. Still 100%, I think that's a play. You had the healthcare stocks with Eli Lilly and AMZN. Anything with a weight loss was up. You had your grade 8, that was up again. Amazon, Google, Microsoft, Apple, Meta up 1.86. Broadcom Technology up. You had down here asset management, BX was BlackRock, I think that is. Utilities. We talked about utilities getting a bounce. Real estate, all the REIT stuff getting a bounce yesterday. You can take a look at this heat map. It is over here on the right-hand side on FinViz. It is just something that you should get used to doing and going to every day so that you can look at it. Eli Lilly, we'll talk about this one. Eli Lilly was a clear winner yesterday. There's one that I want to bring up, and those guys who read the newsletter, if you don't read the newsletter, you should get the newsletter. Yesterday's newsletter was one of the ones that I think if you just read 5 newsletters all year, this is one of the newsletters you should read of mine all year. It's the revision to the Daily Stock Pick Core portfolio. I removed 4 stocks and added 2, and I gave you reasons why those 4 were taken out and why 2 were added. The 4 that were taken out, QCLN. Hopefully nobody got into that one. That was more a personal one. When you take a look at the core holdings of this, it was Tesla. It was On Semiconductor, Rivian. This was basically a great ETF to hold. You can see on this chart, it just sank. Target removed, even though today it's getting upgrades. It has just fallen. I still hold this one. I have trimmed slightly for a loss. I have not left like the entire position, but I have sold some shares because I needed some money to put into something else. Snowflake was removed for no other reason other than one that I added kind of is similar, and I think their growth path is better. This chart shows you just kind of the how it's traded between 180 and 140 for an extended period of time. I don't expect it to move out of there. I don't expect it to get back to its highs until they start showing some improvement. Moderna, 100%, this was a trading stock. This was in the core portfolio to trade on pops. Because it's a COVID stock and they have done nothing since COVID, I just took it out. Added SMCI. We'll talk about SMCI right now. Honestly, it's up year to date 278%. It's got a forward PE of 14. Nvidia's forward PE is 27. This is the AI train, and it's a low PE on the AI train. You can look it up on FinViz if you want to see what they do. You can scroll down here all the way to the bottom. Engages in the distribution and manufacture of information technology and solutions. Basically, they build the rigs that NVIDIA chips power. That's essentially how it's been described to me. These guys came up with NVIDIA, so they know everything about NVIDIA. They can do NVIDIA stuff. When I looked at SMCI and I saw, you guys know I love gaps. The gap fills up top. This gap goes to 347. You're on your way to filling that gap. And we talked about, I can't bring it down, but this gap up here, and it's from 300, about 300. You're trading at 308 right now, and you've got a little bit of button hook. If you got in here at 245 and you want to trim some off, I think once you lose that 9-day and you lose the confirmation there, I think you can trim it off. But I'm particularly adding to this one, and that's why I put it in the core portfolio, SMCI. The other one that I added was Palantir. Palantir, in my mind, I think this gets back to at least $25 at some point in time. The valuation is going to be tough for it to justify $25. But if you take a look at a long term of this one, we've come down from those highs. And remember, this only IPO'd in 2020, and it was a SPAC. So it came out in 2021. It's held up. That 46% goes up to $27, which I think is where this provides some support. Remember, higher for longer hurts this stock because they are not cash flow positive. I don't think they're cash flow positive. They are making money on an EBITDA basis, but they are not cash flow positive. They lose about $48 million. You do want to be in this stock when they are cash flow positive. That's why I put it into the core portfolio. You can sign up for the newsletter free at dailystockpick.substack.com. It is free. I deliver it free to your email box every day, even when I don't do a podcast like yesterday. I just updated the newsletter. So, and the newsletter revolved around the core portfolio. And the core portfolio, if you want to follow it, is here at Savvy Trader, SAVVYTRADER. Savvy Trader. If you're not signed up for Savvy Trader, I would tell you to do it. It's the best journaling platform. Again, it's completely free. I don't get anything for you to sign up or follow me on this one. But the core portfolio is these 35 positions. So 34 stocks right now. I think these are great for you if you want to just buy and hold. Look for entry points that are lower. If you're new to trading and you want to read up on some stocks, go to Savvy Trader, look at these stocks, understand the charting of them, ask me any questions that you want. But the core point was, hey, let's find about 30 stocks in a portfolio that we can hold, and it's equal weighted. So it's 100 shares of every stock. That's why you're seeing Eli Lilly is 6% of it, because I bought 100 shares of this one at like $530. Costco, I bought 100 shares of this at about $500. UNH, I bought 100 shares of this at about $500. It's an equal weight portfolio. So I started this in June because I wanted to show people, hey, if you buy at the high, can you still make money? Well, take a look. We bought at the high in June. Year to date against the S&P, we're up 5% year to date. The S&P is up 3.94%. So if you want to look at QQQ, year to date, the Qs are up, and this is again just since I started the portfolio. So it's just since June. I say year to date because we just started, but it's up 1.74%. Daily stock pick is up 2.49%. If you go to IWM, they are up 4.59%, or I'm sorry, they're down 4.59%. We're up 3%. So you can track, this is the way you can track your performance. I want you to journal your trades. If we go over here to history, you can see all the history of the core portfolio. When I add, when I remove, you can view more history, but you can see I don't take things in and out a lot. We started this back on June, it looks like June 20th. I bought 100 shares of everything. So, again, if you want to follow it, the key point is sign up for the newsletter, sign up for Savvy Trader. You won't miss any of the action. And even if you miss a podcast, you won't miss anything with that. Now, we talked about SMCI. This is a great article. I will include this in the newsletter. Which one is a better buy, Palantir or Super Micro? I'm hey, let's look at the results first. The obvious winner, Super Micro. So both of them were added to the core portfolio. This is a great article. It is from October 9th, so just a couple of days ago. So the news is actually still valuable there. You can take a look at that one. Let's see. We talked about the performance since I added it. QQQ core performance. QCLN I took out. Target I took out. Snowflake I took out. I added SMCI and Palantir. Let's talk about Delta earnings. Delta beat earnings and guided in line. So they're not saying, hey, we're seeing a seasonal drop off. They're saying, hey, we're going to continue this strong growth. They popped in the pre-market. They are up about 3%. We talked about this one down at about 32, going down to 32. Never got there. Got down to about 34. It's popped. It's at 37 right now. I do think this is a $40 stock. So if you want to own an airline, this is the best in class. Delta, Probably no more catalysts other than, hey, fuel prices are going up. They did say that fuel prices were going up. It's not a horrible one to own. If you want to trade this one and you're buying at 37, I think that's a little bit extended on an earnings day. Again, it's up 3.4% pre-market. I would say that this one comes back to the 200-day at least at 41. But this little gap right here at about 40, that's what's interesting to me. Buying at 37, if you add a little position, if you want to hold it long term and get long term capital gains, I think that's probably a better bet. This is a good article from Seeking Alpha. Sell Google and buy Microsoft because of the search wars that are coming. I'll include this in the newsletter. It's an interesting article. I actually tend to like owning both. I don't think I'm going to own one over the other, but I like the article. I'll include that in the newsletter. This one, we go over Meta, and I said buy Meta under 300. I still think you're fine buying Meta even over 300. This one is a solid look at the fundamentals. It's a bearish case as to why Meta is too expensive right now and its run up. I don't tend to agree with this one, but they make solid arguments. Here, let's look at Meta. Meta is in the core portfolio. It's at 329. I've told you to get this under 300. Just last week, you could have gotten it under 300. It's at 327. In pre-market, you're at 329. This is running up into earnings. I think when earnings come out and they announce that they didn't spend as much on the metaverse, I think you're going to see this one at 400. At some point in time, you're going to see it go back to 400. Because if we just go, let's go to quarterly. Let's just look at this one quarterly. The quarterly right here, you're at 384 in Q3 2021. That was your high, 384. That's the all-time high. You're trading at 327. Now, 324 is to 327. That'd be a great move. The algorithm doesn't do great on this one. Makes you 0.2% versus just buying and holding the asset makes you 0.3. But the dip down, if we take a look at, let's just take a look at a monthly. That dip down right there, which was 2021, 2022 into 2023, and then you bounced off those October lows and you just ran up. That's why you're seeing a little bit of a pullback. You've just gotten back to the range of growth. So I still think that Meta is a good buy here. I don't think it's a bad buy. Boeing under 200. We'll take a look at the chart in 1 second. But Boeing, big but disappointing month, creates big opportunity. This is from yesterday, October 11th, and you can read about Boeing. Joe is our in-house Boeing expert, our insider trading on Boeing. He's not a huge fan. I just looked at this one on we talk about button hooks at the top, how it kind of curls over when it gets too extended and then it comes back down. Well, you're seeing that in the bottom here. The bottom here at what, 180, and you're at 196 right now. You've got confirmation above the 9-day. The 9-day is crossing there. The 50-day is starting to turn positive. You're seeing that 50-day, that death cross right there on September 25th. That's not a good move for a stock, but this one typically just recovers pretty well. That's a steep move. But when we look at a weekly, you'll see we've been under that 200-day for a while. And what are you seeing? You're seeing that 200-day start to cross up. Could this just be the pullback that's happening on another leg up? I like Boeing. Boeing is one of the 5 stocks that I'll tell you right now that I really, really like. We talked about the S&P 500 yesterday, how Eli Lilly was a big winner. Well, AMZN was a big winner as well. And AMZN is one, I think this one, let me see. We've got an article here. Should you still buy? This is an article from Motley Fool. Should you still buy the NASDAQ's best performing stocks in September? So it's a little bit older. It's updated October 10th, but you scroll down, there's Global Foundries, and here's AMZN. And one of the things that I know about AMZN, Ozempic, if we look at Eli Lilly, look at AMZN stock. Take a look at this weekly. It's just bounced off of here and continued up. If we look at the long-term trajectory, you're riding that 200-day. Yes, you're up over the 200-day. This move right here is similar to Eli Lilly, but Eli Lilly is way ahead of Amgen. So look at Eli Lilly. You're taking off on Eli Lilly. At 544, you're at 605 right now. Within the last 5 days, the last 5 days of trading, you're up 11% on Eli Lilly. Go over here to FinViz, you look up Amgen, okay? Amgen's PE is 19. Their forward PE is 14. It's got a 3% dividend. You look at Eli Lilly, and I'll tell you why I'm comparing these two. Eli Lilly, dividend of 0.75, PE of 85, forward PE of 48, significantly higher. Then here's the kicker as to why I'm looking at this. Novo Nordisk, their PE, forward PE of 32, PE of 23, only a 1% dividend. So why am I looking at Amgen? Well, this article says it right at the end. Amgen has a number of weight loss drugs in the pipeline, and the stock trades at a modest forward price to earnings ratio of 13 to 1. If any of these upcoming drugs prove to be breakthroughs, the stock will likely be a winner over the next year or two. That's what you're betting on Amgen. You can bet on Lilly, you can bet on Novo Nordisk. They've run already, but I think Amgen, if they get one of their weight loss drugs, I think that's a great opportunity. So take a look at that one. That is a great stock right there. We can close this one. And next one, PXD. Did you buy it? Waiting for the takeover, the buyout from Exxon. Here's a great article. Pioneer Natural Resources exit the stock if ExxonMobil announces deal. This is from October 6th. The deal was announced, and the deal was announced at $60 billion, $59.5 billion. $253 a share based on Exxon's closing price on October 5th. The offer represents an 18% premium on PXD's closing price of October 5th and a 9% premium to its prior 30-day volume. Under the deal terms, PXD shareholders will receive 2.3234 Exxon shares for each Pioneer share at closing. So you're getting 2 shares of Exxon. Exxon is in our core portfolio. It's at 107. So you're basically getting $214 at closing, 2.32 shares of Exxon, 214. But it's worth 250 per share. I think there's some cash that's involved too that Pioneer folks will get. But you're getting 2 shares, okay? If this deal is capped, say it's 100% capped at 253. It's not capped because Exxon's shares could go up, but if it's capped at 253 or 257 like I calculated, that's not a huge move from here. Now what you do have is you have the opportunity for this one on the earnings call to actually get a special dividend, which probably will be announced. I don't think Exxon or Pioneer wants the stock price to crater, so they will announce a special dividend. It probably will be in line with the old dividends. If we go over here to FinViz, we can take a look at their dividend history. Let's just go PXD, Pioneer Natural Resources. We look at the dividends and we look at the dividend history. You can see they're paying out special dividends because oil has been going up. So the special one last time was 59 cents. You will see another special dividend announced for November, I think it is. Yeah, last year it was $4.61. You're not going to get $4.61. You're not going to get $4.48. You might get something like a $2 because oil has been in the $80 range. If you get a $2 and you're sitting there waiting and the stock is at $240 to $250, remember the cap is $253. I think once you get that, and I think it will be very quick, but I think once you get that dividend and the ex-dividend date, the paid dividend date, the ex-dividend date passes, and I'm not sure, they're going to announce the ex-dividend date at the earnings, most likely. Once you get that, I think you trim PXD, if not get rid of it all. And I think just because the upside is so limited, I think there's going to be a lot of that that's going on, and it's going to put a downward pressure on the stock. So you take the dividend out, you take the dividend, and then you sell it the next day. And I think that's the play on this one because I think there will be downward pressure on that. I did not know this, but you guys know I ordered from Temu a few weeks ago. I didn't know Pinduoduo, PDD, actually owns Temu. They're losing billions of dollars. There's questions as to why the Chinese are, shipping things over here at such low cost. Does the Chinese government track what we're buying? Blah blah blah. If you don't know Temu, I'll put a link down below for a referral credit. You can sign up. You can get like socks for 50 cents, a bathing suit for like $1. I got one of these universal chargers. I think I got for your iPhone, your watch, and your AirPods. I think I got that for like $3. It's significantly cheap. Returns super simple, same as Amazon. You package it up, you take it to the UPS store. It's not much different, but Pinduoduo actually owns them. So I'll be watching that stock, and that's interesting because since I found this out, this $98 cross, and you're at 110, that's a big move. I mean, that's a huge move right there from 98 to 79. That was just October 2nd. So China, Pinduoduo, I like that stock. I like that one a lot. Significant TrendSpider update. You can read about it here. I'll include this in the newsletter. ICT's new secret women proximity indicators. Jason goes over everything that you need to know about these indicators in TrendSpider. It's another example of how TrendSpider just continues to give you additional services without charging you more. And again, you can sign up through the link below. You get 25% off. I think it's $480 if you skip the 7-day trial for a year. It's a really good deal. Social requests. Let's look at Restoration Hardware. Let me see. Yeah, Sully on Spotify. Why don't you look at Restoration Hardware? Restoration Hardware is an interesting one. It's a luxury good item, and luxury over the last 3-4 months has done really, really well. The consumer of luxury has suddenly stopped. This is 2021 where it got hyped up. Then you saw it fall way down. And like I said, over the past few months, you saw it rise from 244 up to almost 400, just over $400, 406. Use that 200-day on the weekly and just lost it. You can see, and let me get down to my support line. You can see some level of support right there at about where we are, 250. You are seeing the 9 and the 21 as negative, and the 50-day, they're crossing down on the 50-day. You never want to see moving averages crossing down on a long term or a medium term. That kind of puts you in question. If we run the 4-hour algorithm, the 4-hour algorithm loses you 60%. You lose the same amount over 2 years, 60%. You are in at 261. The problem with this one is that they're just not, I think their sales, if I want to read it right, their sales have kind of come down. You can look downgrade. I mean, it's just downgrade. Average target price is still 357. You're only at 250. But the most recent ones, 300, 298, 330, you don't have much upside there. And if we look at what people inside are doing, they're selling. I mean, look at this. The one director at 310, he sold $7 million. You can see these guys here, Option Exercise and Sale, they're selling at 262. They're telling you it was too expensive here. You're at 245 right now. You're about where these guys sold hundreds of millions of dollars worth of stock, the chairman and CEO. So I think it was overpriced. I think it's coming back down. You can see the PE is still expensive, 19. Specialty retail. If we go to specialty retail here and we just sort it by PE, I mean, look, it's expensive. We'll sort it down wise. 61 is the highest one. SPWH 38. Where's Restoration Hardware? They are at Restoration Hardware, number 14. So it's still high for specialty retail. I mean, look at O'Reilly Automotive at 25, Five Below. I mean, Five Below, Jesus, how is that one? Freaking 33. But yeah, Tractor Supply Company, they were heavy growth, and their PE is 20. I just think for Restoration Hardware, Ulta Beauty, Ulta has been a horrible stock for me. Elf is the one that I think is even better than Ulta Beauty. Restoration Hardware, I think they had their day. The problem is it at its bottom? I don't think so. I mean, look at the weekly here. I think it's put in that support. When we look at that, if we go to monthly, it's just kind of, putting in support levels here. I would rather see you on the upside to say, yes, it's coming back. The PE is what kills me. Let's go over to Seeking Alpha and let's look at Restoration Hardware here. What do you have? You have hold. You have buy. Wall Street analysts buy at 3.8. That's not super high. Quant is hold. Attractive prospects overshadowed by weak guidance. That's the problem, is they gave weak guidance. So I don't think it's a rebound play. I think it's just luxury goods with the consumer becoming weaker. I think that's the issue with Restoration Hardware. VTI as a tech play for Jay Steinbeck on Spotify. VTI, if you don't know, this is one of the Vanguard. It kind of, I think it trades along with the Qs. And so I don't, probably this one's best. Let's take a look. VTI. We're going to go to, no, I want VTI. It keeps auto-correcting on me. But VTI, Vanguard Total Market Stock Market Index. I think you wanted VTI. Let me just make sure. Did it auto-correct on me? Let me go to my Spotify real quick. So I don't do, I did this the other time where I did not. How do you feel about VTI as a tech index play? Well, it's a total market stock. VTI is a total stock market index. So it's not a tech play. Let's look at Vanguard Tech Index. That would be VITAX, Information Technology, or VGT. VGT is the growth. QQQ is, VGT might be a better one. Let's chart these. Let's go VTI. We'll go charting, and we'll select metrics. We're going to do performance. We're going to do total return. Update chart, and we're going to do Vanguard Total Index, which is VITAX. VITAX. There we go. And we're going to do VGT. Let's look at these. VGT, because while we should be looking up the holdings of these, what you're really asking is, hey, what's the return on these? So let's look at 1 year. You're looking at VTI at 22%, VITAX 43%, VGT. You know what? Let's put in QQQ in here too. Since you're specifically talking about tech, look at QQQ over 1 year, 42%. We can look at 3 year. VTI 25%, VITAX at 33%, VGT at 33%, QQQ at 28%. So your growth at VGT is significantly better at 3 year. At 5 year, your VITAX and your VGT blowing the other two away. So I don't know that VTI is a play on the tech index because it's a total stock market index fund. And VTI, you can see, if you just look at the holdings, 27% is it's high. I mean, its top 10 holdings are tech, but it's a total market, and it's not. Remember how I talked about the equal weighting in the core portfolio? If you go over here to the Daily Stock Pick newsletter, and then you go down as to, you'll hear often ETFs referred to as equal weight. And there's a link to the stock market, market weight versus equal weight. VTI, because it's a total stock market, it's not an equal weight. So they're not buying 1 share of Apple, 1 share of Microsoft, 1 share of Amazon. They're buying the percentage of Apple of the total stock market. They're buying the percentage of Microsoft of the total stock market. They're buying the percentage of Amazon as the total stock market. So it's not an ETF where, oh my God, I've got these, this is a great tech one because they own tech. The only reason tech is their top holdings is because tech is the top of the stock market. These top 10 holdings are 26% of the stock market. If you want a Vanguard equal weight, Guard equal weight, total stock market. If you want a equal weight, this would be, let's see, VTI. Looking for an equal weight in Vanguard. Yeah, you can research it. Just find an equal weight one. But VTI, the only reason that it's a tech one is because tech is the total stock market. I mean, Berkshire Hathaway is up here at 1% of the total stock market. You can find other things, but I do think that the VG, the other ones that I charted against, the VTIAX, let's see, what was it? Yeah, VITAX and VGT, they outperform. So if you want to look at the performance of those, that's where I would suggest you go to. Sam from Facebook. So with everything going on in the world in the Middle East right now, what's your thoughts on KTOS, Kratos Defense and Security Solutions, or even Boeing as a play? I went over Boeing. I think Boeing's great, but let's look at KTOS for Sam. KTOS. I mean, can't argue that defense here in Israel. I mean, this one saw a nice bump here from 14 to 17, just with the probably the war that's going on. KTOS, the algorithm loses you 36% on this one. You lose 23% with just buying and holding. You can see it's below its 200-day. The 50-day has finally started to move positive. I think they'll get a bump here. I don't know much about their business. Looks like they have $2 billion market cap. They're losing money, $28 million they're losing, so it's not a huge one. Their short interest is only 2%. Their forward PE is 34. Super expensive. It's up 65% year to date. July is the latest things. Raymond James says outperform at 17. The average target price is $17.91. You're trading at what, $17.30. So I think the upside in Boeing is significantly better than this one. Does that mean it's going to outperform? No. I mean, you take a look at here. There's a lot of people selling, a million shares. The president at 1650. Building a pool in the backyard. This dude, VP and corporate controller, he's selling at 15. So they're selling at much lower prices all through the summer. So do I believe in it? No. Do I think you should put money into it? Probably not. I'd rather see you put money into Boeing. Look at this chart. This is the weekly chart. If we go over to Boeing and we look at the weekly chart, I think you just see a better opportunity where it's not below. It's got that golden cross on a weekly, and I like that one. It's beaten down. We can see it's beaten down from the 350s, 400 in the pre-pandemic here. They once they announce that dividend, and if they get some cash flow going, I think these guys are fine. Let's look at some scans on the week on the core portfolio. Walmart. You guys know I hate Target. It got a cross up here, 158.21. Walmart, great stock. I do all my shopping at Walmart. I like Walmart. It's a good company. Pepsi. We talked about Coke coming out of the index. Paid subscribers know Coke is probably coming out of the core portfolio. I haven't pulled it out because I do think it's on the rebound. Coke and Pepsi. Pepsi had great earnings. Coke had a cross up here at 54.22 yesterday. Their earnings are coming up October 24th. Greatly over exaggerated the move in the weight loss drugs, basically taking share out of Coke and Pepsi. It's not happening. UCO, which is the triple levered ETF for oil, we've seen that pull back in oil. UCO based on the futures, 32.01. I'd be a little bit nervous about buying into oil right now. I think Iran had some talks with Egypt yesterday, with Saudi Arabia, not Egypt. And so I don't know that oil's been going to get pulled off. If Iran had anything to do with the Hamas attack, you may see something like that, but I'd be a little bit nervous about buying a triple levered ETF, trade it on a very tight stop loss. Monster Beverage, which is in I think the S&P 100, this got a cross up. This has been pulling back. Same kind of thing. It's probably weight loss drugs and everything that's pulling this one back. It's just it had a run up. It's pulled back. It's not quite at its 200 day on the weekly. I would be looking at mid 40s for this pullback before you start buying into this one. Stocks I like. So we talked about Boeing. Those were all the cross ups, by the way, that I saw. We talked about Boeing. I like, and I'm going to end this episode with just about 5, 6, 7, 8, maybe 8 stocks that I like. Palantir. Palantir added it to the core portfolio. I think anything under 16 on this one, great buy. I think anything below 18, pretty good buy. Start your position. SMCI. I think this one gets back to back over 350. I think it continues its ascent. It's at 308 right now. It had a nice big day a couple of days ago. Shopify. I've talked about it before. The valuation in this one is high. If we go over here and we look at Shopify, their earnings are coming up. Their forward PE is 68. They're losing money. They have cut costs out of their business. That's what I like about this stock. They have cut the costs out of their business. If we look at the summary, strong buy from Seeking Alpha Analyst. Wall Street, strong buy. The Quant, huge strong buy, 4.89 out of 5. Shopify is, in my mind, it's a buy. Bull run is likely over on Shopify. I mean, that's from September 27th. I think that guy's wrong. I like Shopify. Lilly, we talked about Lilly. I like AMZN more than Lilly, but if you bought into Lilly, I wouldn't blame you. That weight loss drug is trillions of dollars of potential revenue for this company. And right now, let's be honest, Wegovy and Ozempic, they are the leaders in this. They are the first out of the gate. If AMZN has anything that comes about it, I think AMZN pulls that one. Uber is in the core portfolio. The 200-day, like I said, to paid subscribers, it's coming in there at its support at 44. Are you getting in at 46 and you're waiting for 44? No. Just buy at 46. Get your position in. I think that $50, that red line up there, I think that provides the resistance. If they announce their earnings are coming up on October 30th, if they announce something crazy like their advertising revenue continues to grow, if you want to look at the stock market nerd, he's got some great analysis of Uber. Mara. I think Mara is an absolute killer stock. It's low. $8. Could it go lower? Absolutely, it could go lower. But I think Mara, and once that Bitcoin ETF is announced, I think Mara takes off over 10. So I think Mara is a good one. The other one that I like is SOFI. And you can see it started to take off here at 758. It's now at 859. If you listen to the algorithm, you would have had $1 in here. A nice big, let's see, what's the move? Let's see. It is, what, 15%? 15% in what? A couple of days? Yeah, October 6th, 5 days, 6 days. Yeah. So those are the stocks I like. Boeing, Palantir, SMCI, Shopify, Lilly, specifically AMZN, Uber, Mara, SoFi. So I will be back tomorrow. We don't have much news tomorrow. I don't think. I haven't taken a look at Uber. But hopefully today is an update. It does look like the futures are still up. Hopefully they're still up. Again, the job numbers weren't horrible. So, okay, take care. See you tomorrow. Okay. Hershey, T-Dog, I can tell you, Hershey's as poopy as the poop emoji. Don't get it. Don't get sucked into that downturn right there. it's still got some downside. If you take a look here, where I think the downside actually would be is right here, pre-pandemic. You can see that double top right there at about 160. So you still have 30 points down in my mind to go. I think that's where you get back to. We can look at this support. Look, nice double top. You almost pulled back here in September 2021, and then you took off. That's where I think you get back to is 165. Now, let's take a look at Hershey here. Yeah. Hold means, don't get it. Especially at 3 on these quant ratings is what I'm looking at. Yeah, a lot to like except the price. Hershey Company holds a dominant position in chocolate industry, 33% market share, has focused on shareholder returns by increasing the dividend yield and buyback stock. The company's brand equity coupled with the cost advantage has allowed for higher margins. I assign a hold because the current valuation of $200 per share seems fair. I just can't. It seems fair. It's not good. So, yeah, in my mind, from a technical perspective, I think you're looking at that right there, even though it might bounce here off the 200-day. I wouldn't expect it to because it's so hated. If we look at, let's just take a look at the VWAP. If you look at the volume weighted average price, since those double tops, you are looking at about 191, and it's trading at 191. You're looking at, it's about 193. So you're trading below it. I just think it's hated. In my mind, there's better opportunities. Hershey has been, I think it was way back, maybe in January, at about this price. Jesse, one of the OG listeners, had asked me about Hershey, and I had a watch on it, an alert in TrendSpider. And I was like, Hershey, it doesn't seem exciting. Well, little did I know, the fucker ran up to 270. So, yeah. I would wait for this one. Now, the algorithm makes you 10% over 2 years, while buying and holding the stocks only makes you 6%. And it's got you out, and you just don't have confirmation. T-Dog, if you're interested in Hershey, and there's nobody who likes chocolate, okay, will tell you. I buy chocolate ice cream. God, in fact, last night my dad bought chocolate ice cream. I'm a chocolate lover. Peanut M&Ms. Hershey's does M&Ms, I think. So, okay, it's 9:25. I'm not waiting until the market opens. I am going to go because my day has to start. I got to do this newsletter. I gave you guys a ton of stuff to watch today. Let's look at the core portfolio. What's the number one? Number one up is Oxy in the core portfolio. Stuff has turned a little down. A little negative. I think what you're going to see here, we're going to go to the settings. We're going to look at display extended hours. We're going to go there. We're going to look at a 5-minute chart. I think you're going to see a bounce here in the afternoon. Hopefully you can see that. This is a 5-minute chart, and you can see when those numbers came out, we saw a dip. Look, here's where you closed at 436. You were almost up to 440 in the pre-market. And everybody was anticipating that inflation was going to come down. Well, no, it kind of stayed in line. So you're just kind of pulling, here's where you open 436. You're just going to open up kind of flat. So I think you're going to continue to see this move up. It's a 5-minute chart. So I like 5-minute charts on this. What's this? What's happening now? Oh, look at that. Analyst estimates, news, and filter. Um, hmm. Apply. Oh, look at that. We can see the earnings today. Fast and all. Domino's Pizza. There's Delta. Look at that 5-minute pop. I think you probably can buy this one in the 35s today. This one will move. I love TrendSpider. Okay, I am out. I will see you guys tomorrow. Take care.